It's Julie Grevengoed from Clarity Realty, and this is our very first episode of Let's Talk Real Estate. Today I wanted to talk to you about the tax advantages of homeownership. There's been some changes, so I want to avoid some confusion. So I just want to first start off with a base of just a couple definitions. When you are preparing your taxes, first you have your income, and then you take off from it either the standard deduction or you itemize your deductions, whichever one is higher. Now last year a major change came through where the standard deduction was raised by quite a bit. So a lot of people that used to itemize don't anymore. So overall that's better, it's a higher number, right? But what it means is all the things that you used to itemize aren't as important to you anymore. So things like real estate taxes, mortgage interest, charitable contributions, those were the majors. So the tax benefits of those three things aren't the same as they used to be for a lot of taxpayers. Not everybody, but a lot of them. So you might be thinking, well, hey, I don't itemize anymore, so maybe homeownership isn't as beneficial. And you might be a little bit right from year to year, but don't overlook the other major tax benefit of homeownership, which is avoiding the capital gains taxes. Whatever money you make on your house, you don't pay taxes on. Like, that is huge. You have to live anyway. So you can either pay rent, pay a mortgage payment, right? Either way, you're paying a payment. But if you make money over here, let's just say, for argument's sake, let's say that you rent, but then it's a little bit lower than home ownership. Let's say that's not true, but for this argument it is. And then you put money every month into a stock account, you know, your mutual funds or whatever you're buying. And let's say you do really great and you make a bunch of money. What's going to happen is that Uncle Sam is going to take a bite of that. Depends how long you hold it, etc., etc. But it's going to be somewhere 10 to 35%. So not nothing. Versus over here, you pay for your house, you live there like you do anyways. The value of your home goes up. So not just the, call it 10 grand that you do as a down payment on your $100,000 house. No, if your house goes up, it goes up even on the money that you borrowed from the bank. Hopefully that makes sense. So you'll make, let's say it goes up 5%. It doesn't go up 5% of the 10 grand you put down. It goes up 5% on the 100 grand that the house is. So then that money that you make on the bank's money, you don't pay taxes on. As long as you live there for 2 years, you don't pay capital gains. The only exception to that is if you make more than $500,000 in gain. So that's big. I don't know that I can make a stronger case for homeownership, but I'm going to try. So come back for episode 2. Thanks for watching.